How's it going, guys? My name is Jared Ace and welcome back to Money Met Eish. Last week we took a look at what ETFs are and why we like them so much. And today we're going to have a look at what to look for when buying an ETF, how to use EasyETFs, the top performing ETFs in South Africa year to date, and my favorite ETF. But before we get into it, please remember that this is not financial advice. I am not a financial advisor. This is a blank cup. Blank cups. Put your logo on my cup. My videos are meant for entertainment and education purposes only. Should you require the services of a financial advisor, please contact a registered financial service provider. Also, remember to hit the like button, subscribe down below, and ring the bell to be notified every time we upload new videos. So, let's get into it. Today we are going to have a look at how to use EasyETFs. But before we do that, we need to know what to look for when we buy an ETF. One of the main reasons for investing in ETFs is to get a wide exposure to companies in a specific theme. These could be South African mining companies. For example, the Satrix Resi 10, which tracks the 10 biggest resource companies in South Africa. Or it could be the 500 biggest companies in the US, in which case you would buy the S&P 500. The three biggest things to look for and compare when looking at buying ETFs are what assets or index the ETF holds or is tracking, the performance of the ETF against its benchmark, and the total expense ratio or TER of the ETF. And we're going to explain each one of those in a little bit more detail right now. The first consideration when buying an ETF is to determine what index or commodity or security you would like to invest in. Is this index or commodity or security going to give you growth going into the future? And one way that we can determine how an ETF might perform is by looking at its past performance. Now, past performance is not an indication or a guarantee of future performance, but it's all we have to look at. So, you can go onto the ETF provider's website, if that is Satrix or Signia or even Absa Bank, and you can have a look at their ETF Fact Sheet, which will give you all the past performance, it will give you the makeup of the ETF, and it will give you an indication of how closely the ETF tracks its benchmark. If the ETF is an index fund, you can have a look at the top 10 companies that make up that ETF, and you can look at them individually. If the ETF tracks a commodity, you can have a look at what that commodity's price has done over the past few years. For example, if your ETF is tracking gold, you can have a look at what the gold price has been like in the past few years. If the ETF tracks a specific country, maybe Israel or Japan or Taiwan, you can look at what the economy of that country is like, how it's performed recently, and what the major industries and threats are in that country. For example, Taiwan's major industry is semiconductors, and pretty much everything else in the country is set up to support the semiconductor industry, which is why 44% of the MSCI Taiwan ETF is Taiwan Semiconductor. And if you include other smaller semiconductor and IT companies into that, like Foxconn, it makes up more than 50% of the ETF, which also includes banking and retail and everything else. But more than 50% of the ETF is just semiconductors and IT companies. Once you have identified what sort of ETF you would like to invest in, we now need to see how accurately does an ETF track its benchmark. Although all index funds should have the same companies in the same proportions as the index that it tracks, there could still be slight tracking errors that will have a huge impact over time. Tracking errors measure the deviation between the fund and the benchmark that it tracks. So let's say, for example, if the JSE Top 40 returns 10% 1 year, and we have two funds, Fund A and Fund B, and Fund A returns 9.6% and Fund B returns 8.9%, that 0.4 and 1.1% respectively are the tracking errors. They both hold the same stocks as the JSE Top 40, so you would assume that they would return exactly the same return as the index. But as you can see, this is not always the case. Large deviations could be caused by a few factors, such as poor fund construction, high fees, or high operating costs, which will all take a chunk out of the total performance and cost the investor in the long run. How do you determine whether a fund is charging you a high fee or not? Let's have a look at the total expense ratio, or TER. The TER, or TER, or the total expense ratio, is perhaps the largest difference and therefore the largest factor to consider when buying into a specific ETF, especially if there are multiple providers offering you the same index fund or the same product. The TER of a fund is a ratio that expresses the total expense of that fund as a percentage of the total assets under management. TERs have a huge impact on the overall performance of a fund. Going back to our JSE Top 40 example, if Fund A has a TERS of 0.15%, while Fund B has a TERS of 1%, Fund A is going to charge you 1.5% of your total 10% gain that the index has made, whereas Fund B is going to charge you 10% of your total gains as part of their expenses. So you can see that TERS plays a huge role in your overall performance of your portfolio. So if we go back and have a look at what to look at when you buy an ETF, we should be considering the index that it tracks, and is that going to give us stable growth going forward, the level of deviation between the fund and the index that it's tracking, and the total expense ratio. The biggest one, the total expense ratio. What is the difference in price between these ETFs? Now let's take a look at EasyETFs and compare 3 ETFs to see which one would be the best, in my opinion, to buy. So let's have a look at EasyETFs. So let's open up Safari and type EasyETFs. So this is the home page. Welcome to EasyETFs, and you can see here right up front the Find My ETF. Now if you are looking for a particular ETF, you can see there are 82 ETFs available on the site, and if you're not sure which one you want, you can have a look here. So general will give you the TFSA, South African or foreign ETFs, and then you can have a look at the asset class if you want equities, commodities, mixed, cash, etc. and the providers of the ETFs as well. So we're not here for this though. We want to compare. So let's have a look at 3. You can see we can have 3 comparisons. Let's have a look at 3 JSE Top 40 ETFs. So we'll have a look at One Invest. Let's have a look at Satrix and Signia Top 40. You can see we've got the icons, we've got the names, and some basic information. We've got a little overview of what they all track. They all track the top 40 in the JSE. So let's have a look. We've got the current price. Signia is currently a little bit higher, and you can see here the index that it tracks. We can also go through and have a look at the fact sheet, which we'll have a look at a little bit later. You can see the size of the fund. Satrix is by far the biggest with 10 billion rand in the fund, whereas Signia has 300 million and One Invest has almost 800 million. And now the part we are the most interested in, the total expense ratio and the 1 year performance. So let's have a look at the total expense ratio. You can see Satrix is by far the cheapest, almost half the price of Signia and almost a third of the price of One Invest. And if we look at the performance, it's only 0.01% difference between OneInvest and Satrix. So if we minus the TERS from the 1 year performance, Satrix far outperforms the other two funds. We can also have a look at the performance. And if you change these charts, if we change these charts around, you can see that they all look fairly similar because they all track the same index. Even if we look here at their weekly performances, 0.1, 0.0, so the differences are very, very slight. If we look at year to date, actually Satrix has outperformed the other two, and it's the cheapest. So if I were right now, if I was to buy a JSE Top 40 ETF, it would be the Satrix Top 40. Let's have a look at the fact sheet. So we can go to fact sheet. The fact sheet is also known as the minimum disclosure document. So we can see here the minimum disclosure document, or the MDD, and this will give us all of the information we need about the ETF. So it gives you the objectives of the investment, the top 10 holdings. Here we can see the top is Naspers, and then the fund information. It tells you when they pay dividends, which is the distribution. It gives you the total expense ratio, any other costs that you might incur. It also tells you how many people are invested in the fund. And here is the other piece of information we want. We want to know how accurately this ETF tracks the benchmark. So we can see here 1 year return for the JSE for the top 40 was 36.12%, and the fund returned 35.81%. So that's a difference of 0.31%. We can look here that since inception of the fund, so when the fund started in November 2000, the JSE has returned 14% since then, and the fund has returned 13.82%. So little bit less than the current deviation, so we can assume then that the deviation will be around that 0.25 to 0.3 range. It also gives you some market details on the fund. So like we said, it's got 10 billion rand invested. It gives you the trade volume, the share price, and the dividend yield. And it also gives you a sector breakdown and a glossary at the end for any terms you might not understand. You can come to the bottom here and read through all the terms. Now the MDDs are updated fairly regularly. So this one was last updated on the 23rd of June. So that is just a quick look at EasyETFs and how to use the compare feature on the platform. Now that we've looked at what to look for in an ETF, we've looked at how to compare ETFs using EasyETFs, let's have a look at the 5 top performing ETFs in South Africa year to date, which means from the beginning of 2021 till today. So the top 5 ETFs, I'm actually quite surprised by. The top 5 ETFs are as follows from number 5 to number 1. Number 5, the Core Shares SA Property Income ETF. Number 4, Core Shares S&P Global Property ETF. Number 3, OneInvest Global REIT ETF. Signia iTraxx Global Property ETF. I'm really surprised that property ETF and funds make up 4 of the top 5, since property has really had a rough time in the last 18 months. And number 1, the top performing ETF in South Africa to date for 2021 is the New Funds Value Equity ETF, which is an ETF which was set up by ABSA in collaboration with Wits University. They look at and track companies based on their PE ratio. So they are a value index which looks at companies based on their PE ratio, and it has returned 20% this year, which is more than any other ETF has returned this year. Now that's the winners. The worst performing ETF is the Cloud Atlas AMI Real Estate XSA ETF, which is a mouthful. So those are the winners and losing ETFs year to date so far. We asked on Instagram if people would like to have a breakdown of the top 5 performing ETFs every month, and the results have been a resounding yes. So we're going to start a new series looking at the winning and losing ETFs for every month. If you can come up with a great name for it, comment down below, because not a good name guy here. So if you can come up with a name for that series, drop it down below. We'll be looking at the top 5 performing ETFs. We're going to give a breakdown of what they track and what they do, and we'll tell you what the loser for the month is as well. And now, my favorite ETF. My favorite ETF is also the only one of the ETFs that we own to make it into the top 10 performers year to date this month, and that is the Signia Smp500. The Signia Smp500 is the cheapest S&P 500 ETF available on EasyEquities, meaning it has by far the lowest total expense ratio. I like the S&P 500 because apart from the fact that it's the 500 largest companies in the biggest stock market on earth, I have always been and will most likely continue to be bullish on the US. If you'd like to know why, please comment down below and I will make a separate video explaining why I am so bullish on the S&P 500 and the US in general, even with the rise of China and growing inflation fears. So, if you'd like to know why I'm so bullish on the S&P 500, leave a comment down below and we'll get working on that video too. So that's it for today, guys. Thanks for watching. If you enjoyed the video, please remember to hit the like button, subscribe down below, and ring the bell to be notified every time we upload new videos. Please also remember you can follow Met Eish on Facebook and Instagram and everywhere where Met Aishes are. Today's video brought to you by Blank Cups. Blank Cups. Put your logo on my cup. For more information about Blank Cups, contact Met Eish at moneymetish@gmail.com. Thank you so much for watching, and good night.